Alright, what's up? We're going to be backtesting. I'm at school right now. It's late, it's like 8 o'clock, and I'm skipping my class so I could do more homework and stuff, but also because I didn't study for the test that was here today, and just due to the fact that I want to work on my trading. I'm so confident in my trading that I'm willing to sacrifice those things. So let's get right into it. It's going to be a chill backtesting. I'm going to do it till 8 to 24 minutes. Let's get started. So on here, we have 15-minute, 5-minute, 1-minute, UTC -4. We're going to be using the inversion strategy along with breaker blocks to identify high probability market situations for potential orders. So we're at UTC -4, 5-minute, nothing really. I'd rather get on the 1-hour chart here rather than the 15 minutes. So an hour, we swept above this, so we could get a retracement back into this fair value or inverse fair value gap before trade higher, but that trade already happened. So we'll just keep going. We're gonna go to the next session. Kind of thinking I might want to use DR concepts, kind of apply those to the market, but we'll see. Those kind of get a little bit iffy. All right, so we're back in that inverse fair value gap. I wouldn't say it holds much power anymore, but it definitely is something that we need to keep our eyes on. So we're 8:59. What day is it? It is Tuesday, and we'll just keep going. So understand the lows of the market. We had relatively equal lows right here that price swept. It's trading under right now. We're going to continue. So I'm going to try to, something I can work on a lot is just following the trend. Understanding you don't need to catch the reversal, but it's more powerful to just follow the trend in a way. That doesn't mean I'm going to follow the trend right now just due to the fact that I can follow the trend, but it's always something good to think about. So we have potential inversion right here, right? So market hasn't even opened yet, so I wouldn't take it really. There's this one that would work. There's a bunch of consolidated highs right here. So I know that this would be taken out right here. Okay, so that doesn't work. So what that confirms to me now is that we're more bearish than bullish, right? So I'm looking for sell side. And sell side for potential sweeps. So what I'm looking for at 9:30 is a move higher. We get that move higher, but we're getting a lot of indecision right now. Obviously, it's market open. We swept the low, so I mean, we could see bullish activity here. Realistically, not. So there was no model in that first macro, right? From 950 to 1010, there wasn't a model that I was willing to take really. So let's look for what candles are respecting what candles, right? We have down closed candles being closed above. Okay, so we swept out all three of those sell side liquidity pools that I marked out. I just wasn't able to really find a trade to those pools. I will let it be known once I find a trade that I'm liking. Right now, usually I just like to wait for that light bulb in my head, but that obviously has not come up yet. So we're inside of an order block, so I would like to see a bullish reaction from it if we are bullish. So it looks to me as if we're bullish right now. So we're creating another one right here. the price respect as I like. So what I would be looking for now is a potential long setup. I'd be looking for this high right here to be swept. So there's no fair value gaps really that are clean enough for me to take. Okay, so let's see here, 12:14, it is lunch. We have this inversion right here. No other fair value gaps, and we have internal highs right here. So what the model would look like would be a long out of here, stop loss below here, and final take profit up there. And although I'm liking it, you kind of do have to acknowledge the fact that we are in a down close candle situation right here that we're reacting to. So I'd take it just because the risk isn't too bad. So what I would say here is that hasn't stopped me out, hasn't hit take profit, but what we do see is we see 12 minutes of just complete indecision of a total range of, what is that, like 10 points? So I wouldn't be too happy with this, so I'd take out 50% of my position. I'd move stops right below that inverse fair value gap, and we get stopped out. So what I can learn from this one is just the fact that it's lunch hour, so don't expect much volatility during lunch hour. But I still think that was a relatively clean trade, and it was a good way to exit out of the trade without putting too much risk on the table that wasn't really necessary for the time being. So we have this inversion. It already worked. I didn't really see it. So that was a good one. We have highs right here that I'm looking to get taken out eventually. The high gets swept, obviously, because you got to understand liquidity and market structure. All right, so that was a good one. And relatively, I don't really see much point in taking or looking for more trades in this session, just due to the fact that we've gotten lots of volatility, and there probably won't be a entry into what I'm looking for. Which what I would be looking for here, you have to understand, is I'm looking for a sweep come down. We have a fair value gap formed right here. We inverse that fair value gap, close above it, retrace back in, and we target that internal high right here. But as of right now, you know that's not going to happen. But that's why we're just sitting on the charts observing, you know. Fucking kid on a bike. Yeah, nothing too much. And we get that end of the day sell off. Yeah, so that was the day. Obviously not much to go off of. No trades really. There was just that small loss, but that was also a small win because I took profits and let the other profits stop me out. So now what we have to notice is that we have, what is that, equal highs right here, more highs here, and we have a low inside of this fair value gap. So we'll let price do its thing. Remember, I try to find the manipulation, find the fair value gap that's being manipulated. Okay, big drop down, so there was some news or something that happened, but we took out the low. Usually what we see is that it's just going to keep dropping, but that's completely relative to the situation. From here now, it looks like it's going to keep going higher because that was a clean sweep. There was no true reaction. I mean, no displacement lower. As you can see, there was a quick move higher, right? So we have that move higher. So let's see. All right, so here. This would be one of those debatable trades. You know, it's 954. We're within the macro. We have a sweep right here. I mean, an inversion, but we also have a volume imbalance that price is within. And what I've seen from some of my losing trades is that my losing trades will come from when price is inside of volume imbalance and it doesn't close above it, but it closes above the fair value gap, inversing it, and then the volume imbalance shoots price lower. So I like the confirmation that we got higher. You know, we got that quick displacement higher. So I would buy 2 contracts there. My stop loss would be just below this change in state of delivery. And it worked towards the high, which was right here. Obviously that's good. You know, I would want to see it work towards this high. So I'll take off 1 contract there, move my stop loss to break even. And it saves you when you go to break even because I would have been in a big loss for no real reason because I already had 10 points of profit locked in. So that's good. Remember, my inversion model works with internal highs, internal lows. So the internal high of the trade was hit. So that means the model was completed. Continuing to watch price action. Okay, so now here we have a bearish trade. So I bet there's some sort of SMT right here with price. What we can see is that price swept this high. Displaced lower, we have fair value gap, price reacted to right here, displaced lower from there. On the 1 minute, continuously we have this order block, price is reacting from, and then finally we have this fair value gap that price just inversed, which would signal my trade. My target being here. We also understand that this was the sweep from earlier, so there would be this low, that would be sell side, so I would take this 3. I'm willing to take the loss here because I understand that what the delivery is looking like. So yeah, the delivery hit my sell side, right? This is the internal low of this model. I mean, you could argue that this is the internal low, but I wouldn't want to see that just because the risk to reward isn't really there. So I'd take off 75% of the position and I would leave the rest stop to break even, right? We put stop to break even after internal low or high has been hit. And then I want to see the sell side here swept. So we hit sell side, that is a continuous good move, good trade. Take out 50% of the position, leave 0.375 of a contract in for a potential market move lower, gets moved higher. I'm going to exit out there. Right, so when you see that trade in hindsight now, you can see that it was pretty clean. And that I would have even attempted to take this trade right here, this short lower. Because in this short lower, what you notice is that Yes, we have that sweep of the liquidity. We have this fair value gap, inverse fair value gap, along with this regular fair value gap. Price sweeps this high and it sends price lower. So this would have been a good entry. So now I'd probably just shoot on the 5-minute. If I see a 5-minute model, I would really like to, I would take it. But what I see at the 5-minute is that we have bullish inversion potential. I mean, no, yeah, that inverse. So I would be looking for longs here out of this order block. Yeah, there's this fair value gap here. If I close above it, it would hit the high. That is what I expected. Now, although this model is still technically in play, you understand that the market situations are constantly evolving, so you have to adapt. So there's this fair value gap now that was inversed. That should send price to the internal low. It does. Obviously, no trade for me. I'm pretty good on the profits for today. Price is more bearish than bullish, which is what we see from that failed inversion and this worked bearish inversion, and just the daily candle going lower, which is what I expected up here. So we'll go to the next session. We'll mark out stuff that we see here in the market. So we got that big move down overnight. Was that overnight? No, that wasn't overnight. Overnight we had it, whatever move down. It looks like there was news after hours. So we're going to pop forward 2 more hours. And we got continuous bearish move down. So hop on the daily chart right here just to see what is happening really, what's the context of the market. We have this low here, this low here. Prices reacting from all of them. So I would like to see a move lower, continuous move lower. So that means I would like to see that market open, price move higher, right? Because I want to catch the manipulation, find the manipulation. So that means what highs would I want to see taken out? Okay, well, that's kind of obvious. Look here. There's equal highs. So we could see that or something else. But now there's equal highs, so I don't want to really look for a short right away. All right, so we get that 5-minute inversion. Trades back down into it. Continuous move higher. So we get a short lower, and this is kind of where your rules come into play. Are you going to take this trade and technically go against your rules? But also, would you miss out, but because of the equal highs, but also would you miss out on a trade like this just due to equal highs? 5-minute equal highs though, so those hold even more market power. So let's just see more of the buy side to see if there's any other equal highs, but this is hard here. I like the inversion. I like the inversion. I like the reaction from here. Let's hop on the 15-minute chart. Oops, 5-minute, sorry. Let's hop here onto the 15-minute chart. It's reacting cleanly from a singular fair value gap. Your target would be the lows. But we also have equal lows, 1-minute equal lows. I'll take this. I could easily get stopped out here, which is fine. You have to kind of be okay with that. And I get stopped out, which is fine. And price is going to reach to my take profit. And it worked. It wasn't during macro, and it was just right as market opened, so there was a lot of volatility. Obviously, the stop loss above the high would have been better, but I didn't really want to assume that much risk in my trade. So letting price continue. Here I'd still have to say that we are bearish, so I wouldn't really be looking for too much. Understand this inversion fair value gap worked. Okay, so we're bullish right now. Took out the equal lows there. Missed the highs. No fair value gaps for me yet. This trade lower. We have this sweep of liquidity here. Right, so we got the sweep of liquidity. The confirmation of price going lower, right? Where does the confirmation come from? It comes from these up closed candles that are closed under being respected, especially on the 5-minute chart. So we have that 5-minute confirmation for me. So I'll sell those 3 there. My stop loss will be price closing above this fair value gap again. So price reaches for the internal low, which is technically the model up in here. So you'd have to close off 50% of your position and move your stop loss partially to break even. I don't feel comfortable moving to break even right now. I'm more confident in move lower than I am confident in price failing to respect the inverse fair value gap. Right, so we're about to get that 5-minute inversion. And we get stopped out, which is perfectly fine. Still understanding the market context at hand. Obviously lots of wicks, not really much clean price action today. Higher probability will come on the higher time frames. That's important to understand. All right, so let's see here. Not much happening. Just thinking because we have a potential, not a potential, it is an inversion higher, but it closed below. I'd let it play out here. Yeah, so that didn't work. So as we can see, that price action isn't really clean right now for my model. For other people's model, it may be very clean, but what I mean by not clean is according towards my model. Right, I still have those 5-minute equal highs that I'd like to see get hit. All right, so price is bearish here. Is no trade for me. Right, well, how can we see that it's bearish? You say, well, price is respecting down closed candles, right? Up closed candles, closed below, is moving price lower. That is showing bearish delivery, right? Same here, same on the higher time frame, right? We have bearish candles being closed below to move price lower. Yep, so there was no trade today. I'm gonna have to get off now, but that was a good backtesting session. There's a couple things that I learned. Obviously, as you can see, the P&L has gone up 200. I was up 1,000, down 1,000, but I'm not really focused on the money aspect. I'm more focused on what I was able to learn. One, learned during lunch, there's lower volatility, so the price action is not going to be as clean. Therefore, your model might just trade around and won't hit take profit or stop loss. So it's careful to be aware of that. Number two, I learned that the importance of 5-minute and 15-minute candle respectives. So looking and being understanding of just how price is respecting the down close or up close candles in a range. Obviously, high time frame context matters a lot, and also just the fact that once we see lots of wicks, it's not really the highest probability for my model, just due to the fact that my model trades without wicks. There's another factor that I like to take into situation, which is just the fact that once we see 2 to 3 inversion fair value gaps fail, then it's best to log off, because the rest of the inversions may not be as good for your model at hand if you're an inversion model. So wicks and a couple inversion fair value gaps failing equals log off for the day. Things I did good, taking the right trades, being confident in the trades that I take, setting my stop losses in a good way. I do think that one short I could have put a better stop loss in order to make it above the high, so I wouldn't have gotten stopped out. So if we're in a trade right as market open from that 9:30 to 9:50 time frame, don't put your stop loss as a close above or below the inverse fair value up, just because price might be not as clean. Put it above the high or the low, just as price has a lower probability of taking out the high or the low when you're doing that. As you can see, right? So if we go back to market open, what's that? Right, so price, although it closed above, it didn't take out of the high, and it closed below. It can be not as clean sometimes, and taking high probability trades is what I did good, banking in my profits, and being confident in who I am and what my trades are. So that was my trading for the day, and I hope you guys liked it. Thank you very much.